By the end of this video, you will learn about a couple of new AI and robotics stocks that you've never heard of before and you might want to invest in. How's it going, world? Michael EJ here, helping you reach your financial goals and dreams by becoming the best investor you can be. If you're new to the channel, what's up? How's it going? Mainly talking about building wealth through the stock market and, more importantly, trying to think differently than the market. My mantra is, if you want to beat the market, you gotta think differently than the market. So if you want to think differently than the market, make sure to subscribe, like this video, and let's get started. Now, artificial intelligence and robotics. It's the new wave. It's one of those long-term structural changes, one of those long-term themes that's out there in the market and driving the prices of some of these stocks, which I truly believe in. It's a game changer. Definitely a game changer in multiple industries. Now, all about thinking differently here, looking outside the box. There's a couple of well-known names that are involved in all of this. You got NVDA. I did a video on them. Check it out in the card. Everybody knows about NVIDIA and their competitors, AMD, Intel. You got Google. Come on, it's Google. I mean, Google's pretty good. You got Microsoft as well. I mean, these are well-known brands, well-known names that are competing in this artificial intelligence space. But I'm going to introduce to you a couple of names you probably never heard of, and I think have some really good return potential depending on what kind of investor you are. So let's get to it. First off, we're going to start off with FARO Technologies, FARO, about an $800 million market cap. So this is a small cap name. But what makes FARO so special is that they're in this 3D measurement and imaging business. You have the machines and the different devices that have the AI capabilities, but for artificial intelligence to work, depending on what you're looking at, for some of these machines that it depends on their surroundings, the vision, you need certain processes inside of that machine so it can kind of evaluate its surroundings, analyze what's going on around them. FARO provides the technology for that. Very good, very interesting, and it's very useful in manufacturing, inside factories, engineering, public safety, construction. Very useful for measurement there. Decreases business risk from their end because measurements have to be precise. Imagine putting up a building and you're off by even a half inch or a couple of centimeters left or right can make a huge difference in building design. So being able to measure things correctly is a big deal, and FARO technology helps with that. Connected to multiple industries. Now, I do view FARO as high risk, high reward, question mark. Stock's definitely high risk. I mean, it is a small cap name. Really, one or two of its products is really driving the revenues right now. Return on invested capital, it's good, not great. And more importantly, they're out here missing earnings. I talked about this in my risk management video. You can't be investing in names that's missing earnings. You know how easy it is to make earnings? All you gotta do is manage sales side expectations and have the CFO work the numbers. Simple as that. You cannot be out here consistently missing earnings. FARO consistently misses earnings. The number one way is a stock can crash. I am not a fan of that. I am not having that whatsoever. And to be honest, their growth prospects are good, but it's not amazing. I truly believe in quality growth, fundamental growth, which is driven by return on invested capital. The company specifically said they're focused on growing revenue. So yes, the growth is going to be there, but it's not high quality growth that's going to be there. And to be honest, it's not like it's amazing to make up for the stock being overvalued today. So this is actually a name to keep an eye on. If the stock market continues to have some volatile moments and the stock dips some more and then looks to make a comeback, I might look into this name. But for now, I will pass. All right, next on the list, Intuitive Surgical, ticker ISRG. Very interesting company, I may say. Very interesting company. And they are essentially in the robot-assisted surgery business. Very interesting, especially for minimum invasive surgery, where there's not a lot of deep work needs to get done. The value add here is that if you're using these robotic assisted kind of devices, using this setup, first of all, it bends more than the human hand. We can only bend so much around. It's not the problem with robotics. And on top of that, it's more precise. And in addition, one thing that's really helping drive the stock in this kind of robotic assisted industry for surgeries is that you can get to the point where you can start collecting data on the kind of surgery you're doing. You can like see what's going on through the robotics. You can collect the data, you can figure out different things, and it's very helpful for cancer patients. Lung cancer, liver, all this. Once you can see multiple times where cancer is moving and you can kind of figure out a pattern or figure out different things. I mean, down the road, that's 5-10 years down the road, but it can really help with cancer surgeries, different surgeries just in general. I mean, it's still all new to me, but a buzz. It's very great, very interesting, and Intuitive Surgical is on top of it all. Also, recurring revenue. Look, once you get one of these big devices, you need maintenance, you need to give it updates like an iPhone, except you got to pay for these updates, and always service requirements. Always bring in the recurring revenue. That's a hidden way of being recurring revenue. And that's 50 to 70% of Intuitive Surgical's business. And there's more and more surgeries happening using their device every year. It's just increasing every year across the globe. Big deal. And of course, if you're going to operate in this, gotta have a lot of IP. Lots of patents, lots of proprietary technology. You guys know I am a fan and sometimes a fool for intangible assets. Intuitive Surgical has them. Definitely has them. And most importantly, there's a ton of money that's flooded this stock. A ton. Absolute. It's ridiculous. It's a lot of money that came into the stock lately. Like it just, I mean, there's a lot of money going into FARO too, but it's overwhelming. So, I mean, it's going to push the stock up. I don't see how it cannot. With all that being said, especially since the company is low risk, I do see a low reward. I see a little upside. First of all, even though the company's low risk, greater returns on invested capital, really good returns on invested capital. I mean, in an industry where I don't think this is economically sensitive, always going to need surgeries, always going to need them. PE's not like through the roof, it's not killing them. But even with all that being said, I mean, there's a little reward here. I mean, first of all, because of all that money that's flooded into the stock, it is overvalued. The stock is overvalued. And it's not like, I mean, this is a larger company, about 45, 46 billion. And this is just essentially one theme. It's not like there's multiple themes driving it. Because there's one theme, I mean, it's going to run its course eventually. And it can't just carry the revenues or carry the growth out, no matter how high quality it is. It can't just outweigh how much overvalued it is today. So don't get me wrong. I'm going to invest in this stock. I would advise you to, but on a shorter term time frame. To me, this is more of a probability call. I think in terms of IRR, in terms of investing. So I want 40, 50, 60% IRR in my return. So a stock that I think can go up by 10 to 20% in like a month or two is totally worth it to me. So that's about the upside I can see in this stock. Not that much more based just on the fundamentals. But to me, I think it's worth it. Last on the list is AB, ticker ABB. And it's about a $55, $60 billion market cap. They're in the business of industrial digitization. Oh, what a mouthful. Yeah, they're in multiple business segments. They're from Switzerland, company in Swiss, and they have 4 different business segments that's kind of ease everything out. When one business segment is doing good, the other one might not be so much, but it smooths out revenues. More importantly, the 2 business segments that are driving the bus right now, the robotics segment and the industrial automation segment. So like I mentioned with FARO, that 3D technology that they sell for the end device, AB is making the end device that's actually going to sell to the construction workers in the manufacturing plants and the factories. They're actually selling the actual device. And there's some good intangible assets there. You can tell it's actually working because one thing with AB that you can really see is the backlog. When you see a growing backlog in whatever industry or whatever business segment, that's what you really need to focus on because that's where the growth's coming from. And the growth is coming from where I expect it to come from. It's coming from industrial automation and it's coming from robotics. Really interesting company, very interesting company. So the intangible assets are there, especially with proprietary technology. And I actually view this as a low risk, high reward. This is the asymmetric opportunity. This is, out of all the 3 stocks, you should buy. Here's why. First of all, stock is low risk, definitely low risk. Pays dividends, buys back stocks from time to time. I mean, that's a double commitment, saying we really got the cash. Really good returns on invested capital. Out here like falling apart with earnings. FARO, not making that happen. Large cap company. PE is in line. Now a crazy PE trades in line with the market. I mean, this isn't that bad. Great, perfect. This works out. And I mean, the valuation is justified today. It's really justified. It's trading below what I think it's worth just today, let alone thinking the good expected rate of return coming from both the dividends and decent earnings growth. I mean, this is what I'm talking about. This is the low risk, high reward name I've been looking for. And best believe this is the one name I expect to hold for a while. Like, I can see this stock doubling in the next 2 to 3 years. Like, I am a believer in app, and I think you should be too. So if you're gonna take anything out of this, buy ABB. And that's all I have for you today. Always look at different things than the market. Always venture out. We know the well-known names in artificial intelligence. We know the well-known names in robotics. But let's take a step out of the comfort zone. Look at some things that aren't so obvious. And sometimes you might be able to find a gem like AB. Michael EJ here, helping you reach your financial goals and dreams by becoming the best investor you can be. And I'll see you in the next video. Peace.